Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judith Heft and Associates, Financial and Lifestyle Concierge. This year, she's celebrating 27 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Now, here's the host of Mastering Your Financial Life, Judy Heft.
Hi, everybody. Welcome. Welcome to episode 93 of Mastering Your Financial Life. And today I'm really thrilled to be here with David Grumer. David is a fractional CFO and a business consultant, and he's a CPA and a CMA, and he has 40 years of professional experience in public accounting. I thought he was only 50, so I don't know. He must have started pretty young.
I started when I was 11.
He's also been a lecturer at the New York Society of CPAs. So I'm really happy to be here with you, David. Welcome.
Thank you very much, Judy. Glad to be here.
Thank you. So, you know what? I don't think a lot of people know what a fractional CFO is. Can you tell us a little bit about what that is and what that means?
Yeah. Fractional means part of the time. And it's kind of like saying outsource. There's a big debate about which is the right word to use. It doesn't matter. Fractional is designed to be an affordable solution for a small and medium-sized business owner who needs the help, can benefit greatly by the services of a CFO, but can't afford to get one into the position right now. Hopefully at a later time for that person.
So when should someone think about hiring a fractional CFO or a CFO?
That's a great question. I picture the ideal candidate as a person who is very busy, totally committed to his passion and pursuing it. He is running around 24/7, he or she, producing, selling, delivering, and doesn't have time to supervise his office. Things can be a little bit out of control when that happens. And so you need some advice to think through potential issues, to get the office supervised, and to have some procedures that will safeguard his or her assets, as well as to implement his policies. Another thing that's missing for that owner is what's going to happen tomorrow? Am I going to be able to meet the payroll? Am I going to be in compliance with my loan covenants? This new product that I'm thinking of bringing out, is it going to have a satisfactory return on investment? So these are all questions that I'm prepared to work on to help give an answer to that busy businessman or woman who needs that help.
So does that, the business person, do they usually have a bookkeeper that you work with, or do you go in there and do the bookkeeping for them?
I think it's a good idea to have the bookkeeping there. And that way it enables me to keep my head in the place where I get a full view of the business from a strategic point of view. Certainly I want to have dialogue with the bookkeeper. I want to help him or her along so that the bookkeeper can get accurate books that don't require a whole lot of adjustment. So it's a good idea. Also, the bookkeeper is handling things like talking to vendors, talking to customers. This helps the business owner not get mired down in conversations that he doesn't have to spend time on.
So you're a CPA by background. That's what you were for many years. So what made you decide to switch gears a little bit, stay in the financial services industry, but then decide to become a CFO or a fractional CFO for businesses?
So I was an audit partner at a national firm, and I was involved, I think the last half of my career, I specialized in financial services, worked with stock brokerage firms and funds. And there came a time for me to retire, which I joyfully accepted that opportunity to do. Played golf for 2 years, and then I decided, let's unretire. I still want to be productive and feel valuable. Why make a change from financial services? Because it's a highly regulated industry. And I spent all my years in financial services not getting in trouble or not having any difficulties with the Securities and Exchange Commission. And I'd like to keep it that way. So I thought to myself, what are the things that I would like to do that actually gave me pleasure when I did my work? And the things that I did were those things such as helping a client solve a problem, helping them save money, helping them clearly communicate what's going on in their financial statements, like drafting footnotes that are a very clear picture of what the business is all about. So these are things that a CFO does, and I would have great fun doing that.
That's great. So, you know what, you've talked about, helping clients maintain control and looking forward. And how do you work with clients like that? Why is that important? I mean, I know why it's important, but maybe our listeners don't.
Okay. So we think about our 24/7 business person, and the internal controls are designed, as we said before, to safeguard assets and see that the policies of the owners are implemented. That enables the business owner to go out and keep doing things that are important for his business at his level of performance. So the controls that get designed, I will design them. It's what I've done in the past. Two kinds of controls: those that will detect fraud or theft, and those that will prevent fraud or theft. And got to take a practical view. Not every control is cost effective, so we look for those aspects. And by doing that, the business owner begins to have confidence that his house is in order, even if he's not there. In terms of seeing ahead, we need to be able to, as a CFO, to say, here's what's coming down the pike. Here are things to be alert to. If we see that our cash flow isn't going to be sufficient to meet the payroll, let's take steps now to deal with that. Let's get a line of credit to protect us in the event that there's a downtrend, and we have to be prepared for that. And the owner doesn't have to say, here's what I need to do. The CFO can say to him, I'm thinking on your behalf, and we need to address this, and here's a potential solution to keep things in order.
Well, that makes a lot of sense to me. And I think that, it's better to be proactive, which is what you're saying, and anticipate what's happening down the road, knowing, is business starting to fall off a little? Am I going to be able to make payroll or pay all my bills, my rent, whatever the case may be? And so it's really important to have a handle on those finances so you can see what's going on.
And there's another aspect of it too, because we'd like to help the business owners do some budgeting. And the budgeting will tell us when we start comparing our actual results to the budgeted results, are we slipping at all? We're doing this throughout the year, monthly. So if we see that things aren't working out the way we expected, let's self-correct. If we see things are working out better than expected, let's do more of it. So the idea is also to stay informed about the progress of the business according to plan.
So when people hire you as their CFO or fractional CFO, is that usually a short or a long-term project, or does it vary by client?
It's going to vary by client, but let's be realistic. I want my customers to be successful. I want to help them grow. A time can come where they need a full-time CFO. And what I hope to happen is when that happens, when that time comes, I want to beat the guy to the punch. And I want to say to the business owner, you now need a full-time person to help you do the work that needs to be done. The work can be short-term if it's going to be with a specific objective in mind. to perhaps clean up a set of books, or a project that is intended to help a business owner grow the business and lead to a transaction where he can exit the business. In that case, I'll just tell you, being part of that endeavor is not a one-man show. It's a team effort. There are many people and many moving parts to deal with, and it's fun to be part of that. And it could be short-term, just for the sake of saying, we'll take it as it goes. Let's try and keep your business under control. And when you're ready to make decisions about selling the business or growing the business or doing whatever you want to do, we can come back and reevaluate what your needs are in the CFO position.
Well, that's great. That's interesting information. So let's take a little break here. We're here with David Grumer, and we're going to take a little commercial break, and then we're going to come back and talk some more.
Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful, because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book, and I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you, so I can help all of you become as financially organized as I am.
And we're back here. We're back here with Dave Grumer, Fractional CFO. So Dave, I think, what if a client comes to you and they say, you know what, I'm ready to make a large purchase. I need new equipment. We need new computers. Our computers are, not that great. I want to get new ones before they're going to die on us. Or I need a new space. We're outgrowing the space, or my rent just got doubled and I don't want to pay that rent here. How do you help the clients evaluate those situations?
So, very good question. We want to outline what are the expenses that we're going to incur as we move along this path. We're going to want to know, if it's a new product, what will the market bear for customers to actually purchase our product or buy our service. And this brings into play the help of people who know production and the people who know marketing. What we are then going to do is evaluate the net cash flows coming out of our future decision. So we're going to summarize across the board, year by year, for the term of a lease or the life cycle of a product. What are the net cash benefits we're going to have year by year after taxes? And we're going to discount that for the time value of money and also for the risks that we're taking. So we're taking into account what other businesses typically have as a risk ratio, which is information that's available in the markets, and also put on our own subjective factors about what kind of risks there are. And we have in mind what's the minimum return on our investment that we want to get. And we'll test that. We'll see if the cash flows are going to result in a good return on our investment, so that we can go forward or decide to go forward, assuming that the risks are manageable. And having manageable risks is very important, because anyone can come up with numbers, but you got to have a sense of what could go wrong, really wrong, that we want to make sure we stay on top of.
There's so many factors to consider. I think a lot of small businesses don't think like that. Maybe they don't have someone like you, or they don't have any bookkeepers, and they think, you know what, all of a sudden their computers are crashing and they have to buy new ones, and it wasn't in the budget. So what about people that are thinking about, borrowing money? I've had my business for 28 years, almost 30, actually 29 will be soon. And I've never had to borrow any money, which I'm pretty proud of. I always, in the beginning, I was putting everything back into it. And, until I started making enough money to take out. So, I never really borrowed any money. And I don't what's a good situation? When is a situation when someone should borrow money, or should they have a line of credit just in case? How do you encourage people, or, coach them on that situation?
I like your way of thinking. The best line of credit to have is the one that you never use and that you never need. I'll tell you that there are two schools of thought about borrowing and leveraging. I won't name the businessman, but there's one guy who is an enthusiast about borrowing other people's money. And he says, if you borrow, the risk and the reward is going to get you so good that you got to borrow. You need more money to get a venture going. If you look a little closer at that gentleman's track record, his first two businesses were utter failures. And then he went on to a couple of ventures that were wildly successful. So, okay, he's made his point. With risk and leveraging, you can get a greater reward. That's one way of looking at it. Another way of looking at it is I'll talk to you about two guys who've spoken on the topic. One of them, old school, who said, when you borrow from a bank, you're a slave to the bank. And he said it's better to go to bed without dinner than to wake up in the morning indebted to a bank. So that was Ben Franklin. And I like to quote him from time to time. So what was he saying? At least in 20th century terms or 21st century terms, a bank wants to be kept in the loop of what you're doing a lot. They want to get paid back. That shouldn't be a surprise. They're going to impose on the borrower ratios to comply with, like tangible net worth, working capital ratio, debt service coverage. All these things to show as warning signs that if you're not able to coming forward, if you're too risky in terms of paying off your loan, they're going to be alert to that and they'll be unhappy. So the other hidden secret about that, not so hidden, but when you have these covenants to comply with, you are constrained. You just can't do all the things that you want to do because you got to think about keeping the bank happy. I got to have my working capital. Can't make distributions the way I'd like to do it. I have to be careful about what I do with my surplus cash and so forth. So the other person I like to think about is Mark Cuban, who's speaks about things like that currently. And he's not in favor of student debt. The other thing he doesn't like is Americans just borrowing too much money on their credit cards to have any money left over to live a life. And that's not good. So I tend to fall out with the last two gentlemen, Mark Cuban and Ben Franklin. My overall thoughts about borrowing are that you've done right. It's good to not borrow, or to at least just have a line of credit in case you do need it. I like to tell people that if they're going to have long-term debt, that's a fact of life, like for buying a building or something like that, that if you have an opportunity to pay back the bank early, I love it. I love the idea. I love the idea of building cash reserves to handle a rainy day. I like the idea of when you borrow for a home loan or a building loan, like in the case of a cooperative housing association, I like the idea of having principal paid down as opposed to interest only. And the reason for that is if there is a big downturn in the market and the breadwinner of a household finds himself or herself without resources, there are going to be significant challenges in terms of of how you're going to live your life. And that's how I feel about it.
Well, this was great. It was a really interesting discussion. Thank you so much, Dave. So how can our listeners find you?
Well, the way you can find me is on LinkedIn. My email address is dave.grumer@gmail.com. And my invitation to anyone that has questions is, by all means, get in touch with me. I'm happy just to talk through any situations that you have for about an hour and see if I can be of help. And I'm happy to do that.
No, thank you, Dave. Thank you so much. This was great.
Judy, thank you very much. I appreciate the opportunity.
My pleasure.
Thank you for tuning into Mastering Your Financial Life, hosted by Judy Heft. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Thank you for your positive comments and sharing this show with others.